We're looking at on the chart right now for Hbar. I have the stochastic RSI, the relative strength index, and the MACD up on the daily. So the first thing that we're going to look at is the stochastic RSI. Right now, the D line in orange is at 8, the K line is at 7. So anytime we see both of these lines below 20, which is where we're at right now, that means that the cryptocurrency that we're looking at, in this case, Hedera Hashgraph Hbar, is relatively oversold compared to the past. Now, also we can see that with this tariff news wick down here at about 17, 18 cents, it was a perfect back test off of resistance all the way over here on the 23rd of April of 2024 when the markets attempted a breakout and inevitably saw a sell-off before Hbar exploded with the other ISO compliant projects. Now, in my opinion, these American cryptocurrencies are going to do the best this bull run, plus their ISO 222 standard messaging projects as well. So when Swift fully implements by the end of this year in November, I expect these projects to do well even before then, leading up to that, because, you know, people buy the rumors, they buy the news, and then when the event actually takes place, I expect November to be the end of the bull run at like the latest. And I'm going to share more data to back that up in this video. So keep watching, because we have sold off from 40 cents all the way down to 18 cents, and we're currently sitting right here at about 23 cents, while the stochastic RSI has been oversold since the 28th of January. Now, looking at the relative strength index, we can see that the RSI is at 35, and we've been in a downtrend since the 18th of November. So even if the RSI rolls over and goes down below 20, eventually I would expect the RSI to bounce to the upside back to this descending resistance. And so sure, altcoins could see another shakeout event back down to backtest previous levels of resistance as support and work our way through here before we see the next liquidity injection in the market to inevitably break this downtrend for the relative strength index and also the price chart to put in new highs. So that's why we look for confluence across multiple indicators. So it's a good sign that the stochastic RSI is oversold. Also the RSI, it's relatively oversold at 34 compared back to the past. And also the MACD line is below the signal line and also below 0, but we can see momentum shifting over from bearish on the histogram, and we see these pink bars right here as momentum rotates. So eventually I would expect there to be a bullish cross where the MACD line in blue crosses above the signal line in orange. And usually what happens is a bullish cross below 0 doesn't necessarily mean we go up right away. It just means that momentum is slowing down for the current trend, which is a downtrend. And eventually that's going to flip back to bullish momentum for a trend reversal. And so we have a key resistance level that we're watching all the way up here that we're just below right now. It acted as support all the way after this breakout on the 9th of December. You can see right here on the 21st of December. We can see right here on the 13th of January. So I would expect Hbar to face some resistance within this. And then I would expect there to be a bullish cross at some point, followed by one final shakeout event down here. For the people that are longing right here, you don't want to long into resistance. What I do is I wait for this resistance to break and hold as support. Otherwise, you're just buying into a resistance and we see a final shakeout event. And then that liquidates the long traders before the market can finally reverse to the upside after that. Because we can also see fake outs where it looks like there's going to be a bullish cross and then it doesn't happen for a period of time. For example, right here on the 30th of January, when Hbar broke out from 6 cents, it was attempting to make a recovery and then had one final sell-off for a double bottom right here by the 4th of February. And then the breakout took place to clear this resistance right here, back test it as support by like the 12th of February, and then the breakout from there. So this right here is just simply a falling wedge. And on falling wedges, we don't wait for the price to break a descending resistance, because as you guys can see, there's the high, lower high, lower high, lower high. We broke the descending resistance right here on the 26th of January, but this can lead to fake outs. As you can see right here, this was a massive fake out on the MACD because it looked like a bullish cross was going to take place. Because look at the histogram. You can see bearish momentum right here, shifting back over to bullish momentum to go back to 0 on the histogram. A bullish cross was about to happen and then whammy, didn't happen. Price got rejected, came all the way back down for a double bottom. The MACD line reversed back to the downside, stayed below the signal line, and then the bullish cross took place on the 5th of February, right here at the bottom at the best possible entry point. And so rather than buying the breakout, or even rather than buying the low right here, because this could have been another fake out, we could have seen the MACD line reverse back to the downside below the signal line, we look for a breakout and a back test. So that would be right here by like the 12th of February, because as you can see, the MACD line drastically shot above the signal line. And on the back test, we were seeing positive momentum on the histogram as well too. And then you just set proper stop losses below your entry point, depending on your risk to reward ratio. So if I just clear the chart right here, and I just trace that over to where we're at right now, this is what it would look like. Now, obviously, it's not going to look 100% like this, but this is why you have to be careful, because we still see the MACD line in blue below the signal line in orange. Even with the histogram momentum shifting, we could still potentially see a fake out, even with a breakout back into this zone that I just showed you guys of resistance, followed by a potential double bottom. And it could be a higher low than this wick down here, or it could come all the way back down here before we see a breakout, back test, and then inevitably a trend reversal to clear the high of the 3rd of December at like 39 cents. And it was even the same high all the way right here on the 17th of January. So for a major trend reversal, we need to see that high clear, where we break this range, form a new range, and then we just simply back test that range as support before seeing the blow off top for the market. That's what I would expect to happen for something like Hbar. And that major breakout of the range would come with the blast off phase for total 3, which is the crypto total market cap excluding Bitcoin and Ethereum. Hbar is included in that. Now for XLM's price chart, what's happening right now reminds me of what happened during this phase after November of 2020, even after January of 2021. You could see these stair stepper breakouts right here. So on the left-hand side of the screen, if I were to draw resistances and support, you can see on this breakout right here by the 24th of November to like 23 cents, this was the highest resistance. Then we just simply did an A, B, C corrective wave to the bottom. And if I zoom in here for you guys, you can see the same thing that I just showed you for Hbar happened to XLM. We attempted a breakout into a zone of resistance that was support on this A wave right here to bounce to the upside. So we got rejected right here on the 24th of December. And so even though we saw a bullish cross on the stochastic RSI on the 24th of December, this is where you watch for fake outs, because massive centralized exchanges, even decentralized exchanges, they have market makers that watch liquidation heat maps to see where these levels will liquidate people. And so this is why we watch multiple things. You don't want to just watch one indicator. We need to look at levels of resistance, level of support as well too, because as you can see, this bullish cross was confirmed down here. And then we just saw it reverse back to the downside with the bearish cross right here at like 36 on the stochastic RSI for a double bottom. So just like I showed you on Hbar's price chart, where we break out or we just bounce into resistance, then we see a double bottom right here, which is a higher low. Then we confirm another bullish cross below 0 on the stochastic RSI right here on the 2nd of January 2021. And then we break to the upside for a break of a range, form a new range, resistance all the way up here. You can see that right here in January to like 32 cents. And then we see a back test of the previous resistance as support. So this is resistance. Now it back tests it as support, and then it tries to hold that range. And you can see the same thing happened again. If I zoom in here, we can see right here after the 22nd of January on the stochastic RSI bullish cross, the stochastic RSI attempts to make a recovery, massive fake out, one more bottom, then break out to the upside. So the price chart breaks out back in this area as resistance right here. New traders come in, they start buying this breakout thinking that it's going to recover. We just simply get rejected from this descending resistance right here. We form a double bottom that was pretty much an equal low. And then we see the breakout, and guess what? We see a back test of that resistance as support right here on the 30th of January, while the stochastic RSI is above 20, confirming the bullish cross. And then we make the next move to the next major peak of the market, and we rinse and repeat it again. And we come back down on the left-hand side. We back test the previous resistance as support until inevitably the bull run is over, and then we go into a bear market. So on the right-hand side of the screen, we've just seen the first major breakout, and this coincides with the Bitcoin stock to flow rainbow indicator during the yellow phase. The yellow phase is the most parabolic, and we just started the first breakout of the yellow phase. And so what we're going through right now is the consolidation phase that's very similar to this consolidation phase right here on the left-hand side of the screen, or this consolidation phase right here. I mean, it looks almost identical. Even if I were to trace the chart from the breakout high to the all-time high for the market and put it over on the right-hand side of the screen, it would look like this. And if I pair it right up next to the chart, it's almost identical, guys. So we could be very close to another massive breakout in the market to form a new range. And then all we do is just exactly what I shared with you before. See the resistance right here on the 24th of November? This would act as support. We bounce off of it, hold it until we break out, form a new high, come back down, back test the previous range until we're at the end of the bull market sometime in quarter 3 and quarter 4 of 2025. So I think XLM is going to go higher. I think Hbar is going to go higher. And same thing with XTC. We're going through a consolidation phase, very similar to what we saw happen all the way back here in 2021 before the next major breakout. So the fact that we are not in this green color code right here on the Bitcoin stock to flow rainbow indicator that I'm turning on and off for you right now is a great sign, in my opinion, that another breakout is inevitably going to happen before we see some type of blow off top and bear market come. So there's not too much for me to share with you about XTC's price chart because it's just simply, just like XLM, just like Hbar, going to follow Bitcoin and the rest of the altcoin market with the blast off phase right here. And so when we see the tide rise, so do all ships, and that comes with clear regulation, clear rules of the road, so that way the fastest cars, aka made in America cryptocurrencies, ISO compliant projects, can pass the competitors on the freeway, the ones with the most utility, the best engines, the best drivers behind the wheel. You know the drill. So very similar to what happened with this pullback by March of 2021 for XDC. We saw the RSI peak out here at like 92 on the 14th of February at roughly 3 cents. And then we saw a higher high at 4 cents. Well, the RSI pulled all the way back to like 46 right here before bouncing to the upside on the next major breakout upwards of 14 cents. And then we just came back down to backtest the previous resistance as support when we transitioned from yellow to green by May of 2021. So I think that's what's coming next for the altcoin market is the next major move for XDC. And plus, we can see that the RSI peaked out here on the 19th of November and formed a lower high right here on the 19th of January, while we are forming a higher high on the price chart in January, very similar to the higher high right here by February, March last bull run. And so with this pullback for the relative strength index sitting at 43, I would expect there to be a bounce to the upside with the next major breakout. We form a new high, and then we just come back down to backtest the previous resistance as support. And then maybe we see either a higher high for the green phase in the market cycle, or it's a lower high. Either way, you just have to be ready before the bear market comes in, and you have to catch this major move. You do not want to be buying the peak of this major move thinking that it's just going to keep going up because of what I'm sharing with you right now. We see the breakout happen fast. Look at this. When XDC broke upwards of 3 cents on the 16th of February and then rallied another 34%, whoop-de-doo, who cares, 14 days later, look how long it took before it broke out. It took like 44 days. So these consolidation periods are lasting a little bit longer just because it takes more liquidity to be injected to move the markets. But look at how fast the breakouts take place when they finally do happen. Once XTC broke the high on like the 4th of April, it only took 11 days to rally, nearly 200%. So these consolidation phases are grueling. They are boring. Look how long this consolidation phase was before it broke that high again. It took 120 days. And then look how quick it happened once the breakout took place to go to a new high. It took 13 days, like 2 weeks to rally another 150%. So when the breakout takes place, going all the way back to last bull run, even this bull run, look, it's happened time and time again. Long, boring consolidation, nothing's happening. Quick breakout, long, boring, grueling sell-off, massive, fast, quick liquidity injection. So this is just orchestrated sell-offs designed to shake out retail so they can buy up your bags. And even if we see this consolidation go for much longer to coil up here, when liquidity gets injected, bam, you only have like 2 weeks to prepare before the next major breakout takes place. And you will see over the next 3 to 6 months what's going to happen. So the best entry points for projects like this happen when everyone's leaving the market. For example, XRP, look at on the monthly chart right here what happened after the major breakout back in May of 2017. XRP went upwards of 40 cents. I've showed this in so many videos. 214 days of consolidation, and then whammy, in one massive green candle, upwards of $2 to $3 in a month or two after that. So if we just measure from the recent all-time high for XRP, what that would look like, 214 days. And by no means am I saying that it's going to take over 200 days for this to happen. It could happen at any moment, but that puts us into August of 2025. So the longer that XRP consolidates below the all-time high, the more that you can accumulate,